Thanks for tuning into yet another episode of Insight. In fact, this is the final episode of the current season, if I can call it that. And we are ending the season with arguably one of the strongest themes as a consensus in the minds of investors. Now, most people say that real estate as a sector or real estate as a space, when it kickstarts an upcycle, it is a fairly long upcycle. In India's case, we haven't seen an upcycle for a better part of the previous decade. It may have started in 2021 or thereabouts. And therefore, the argument that we are in the starting throes of an upcycle may well be believable. The questions, though, I think that I will have for our expert Vinod Karki today, who's from ICICI Securities as a strategist, is where does he believe we are? And then together, me and Vinod will try and corroborate that with an industry captain. In today's session, we have the pleasure of having Mr. Irfan Razack of Prestige. Both of them need no introduction. Gentlemen, thank you so much for taking the time out and being with us on this final episode of Insight. Vinod, may I start with you? One quick factor or one key insight. I mean, everybody's now almost on consensus that we're in the midst of a real estate upcycle. What is that telling statistic that you have noticed in your research which strengthens your conviction around this?
Yeah, hi, Niraj. Thanks for having me. And so if you see real estate over the last 25, 30 years, it's a deep cyclical sector. And if you take Bombay as an example, the first upcycle happened after the liberalization of 91. And that lasted till about 95, 96. And then it fizzled out, bottomed out around 2002-03. And then it was almost a decadal upcycle in the overall pan-India real estate, actually, till about 2012, I would say. And from then, it has been on a stagnation phase, if I may call it. But what is interesting and why we think this is happening, that this may be a upcycle again, is basically its relationship with the overall investment rate. The gross fixed capital formation, if you see, the post-pandemic recovery in the economy, in the GDP, if you watch it closely, it has been driven by the gross fixed capital formation. And whenever the capex cycle or the gross fixed capital formation comes to mind, we always talk about the government spending, the corporate spending. But people fail to realize that real estate is the largest contributor to the gross fixed capital formation. The household's contribution to real estate investments at the peak of the earlier investment cycle around 2012 was close to 38%. I mean, 38% of gross fixed capital formation was from the real estate investments by households. From then, it has been on a downhill share, rather, because the overall investment cycle fizzled out, if you see, and it bottomed out somewhere over the last year or so, as we see the gross fixed capital formation, driving growth. So two aspects of gross fixed capital formation is one is government spending. You have been seeing that rising really fast. Sure. But the second underappreciated, I think, part is that the investment, real estate investments, households. Now we have the institutional data of gross fixed capital from the share of institutions, which is clearly articulating that this gross fixed capital formation growth that we saw post 2021 has been driven by government capex and household investment in real estate. So this is national statistics data. But sure. Apart from that, if you were to look at anecdotal data, so there are a lot of private surveys which say that that this number which we saw in the national accounts in 22 has extended in 23. If you look at a lot of surveys which talk about pan-India absorption of real estate, sure. If you look at construction activity within gross fixed capital formation, that has picked up. If you see the collection of revenue by state governments in terms of property registration and all, that has also really picked up.
Sure.
So a lot of these factors, and if you look at pan-India companies like cement companies and steel companies like a Tata Steel or Ultratech, in their results, they're clearly articulating that construction from real estate activities is pan-India without any problem is gaining traction. So a lot of these factors are indicating that we are in the cusp of a real estate cycle, which kind of peaked out in 2012, bottomed out in 21, and is probably picking up right now.
Okay, let's actually ask Mr. Razack what does he feel about it. And I will play the devil's advocate here as well, if you will. Though there are very few reasons or points with which you can do that, Mr. Razack. Thank you for taking the time out and being with us today. You've told me in the past, I'm sure you've told on other platforms as well, that you too believe that you are in the midst or at the starting throes of this upcycle. Now, based on whatever you have seen around the world versus what's happening in India, where are we in this cycle? How strong do you think this upcycle could be? And could it be a slightly elongated one in that the economic growth engines of India might, to a lot of people, look similar to what was there back in 2003 to 2008? So does it have the probability of enhancing both the duration as well as the depth of the current upcycle?
I think Vinod has very nicely articulated this whole position. I've always held the fact that real estate is the biggest contributor to the GDP of the country. Our activity, the real estate activity, obviously churns a whole lot of industries. I think if you take a guess, it's more than 230, 240 industries are affected by this activity of real estate, apart from providing jobs. That's a labor market, and there's a huge demand for labor. Now, what has happened post-COVID is that the demand for housing has grown. The office, of course, is a different cycle altogether, but then it's a continuous process that happens. But the upcycle is there. You see, now what contributed to this is we were in a low interest regime at one point of time, about 2 years ago. And then again, the interest rates have definitely slowly gone up northwards. But it isn't as bad as it will discourage people to buy. People are still committing themselves. And I think we've reached the peak of the interest cycle also. And from here, I think we should see with the softening of interest rates as we go along, because even inflation has been completely come into control. Now, with all this, with the activity that is being done by the real estate companies, and like very nicely said, it is the households who are committing themselves and buying real estate, buying a home for themselves. And of course, some are investments in commercial property also. With all this, it definitely helps churn the economy, and we definitely are going to see a larger period of upswing. The only danger is that we should not allow the prices to spiral up. As long as we are able to maintain the affordability, we should understand that there is a certain barrier in which people can afford to buy homes or afford to invest also. And the moment that barrier is breached, again, we get into a stress mode. Now, without overtrading, without getting too excited about the current scenario, if you are able to manage our business, if you're able to produce and deliver, because for me, the bottom line is producing and delivering. It's like any other manufacturing company. Now, but here the dynamics are very different. You have to deal with a host of issues. But at the same time, the start and end is important. Start is when you launch a project, end is when you deliver a product. Once you're able to do that properly within the timelines, within the quality that you had promised, and if the entire industry is able to do that properly, I think we are going to have a larger upcycle. Now, what is contributing, as I said, one is the interest rates, again, is going to stabilize. Second is the confidence because of RERA. RERA is the regulation itself is giving investors a sort of confidence that tomorrow, if there's a default, there is something for the buyer to fall back on. So these are the things that will help. And if we do our job the way we are doing it, I think we are in for a longer period of good times.
Okay, Vinod?
So, so in our study, what we realized is the real estate sector is a long series. When we saw the correlations from 1950s, whenever the real estate cycle picks up, the overall household income also has been doing well. And one of the reasons, straight reasons, could be that, as we know, real estate is the second largest employer in the economy after agriculture, and largely of the unorganized segment. Now, if you look at the unorganized segment, if you are into agriculture activity, your daily wages are around at 300 mark number. But if you get into construction activity, especially in the rural areas, you start reaching 500, 600 rupees per day. But what we realize is in the urban areas, it can be even higher. And we have seen the clear correlation that whenever in the real estate cycle picks up, the construction workers' wage growth also picks up, which has a very positive effect on the overall income growth in the economy, because it's a large segment of the economy which only flourishes when these kind of jobs are available. So are you currently observing any these kind of trends where the typical construction worker, be a painter or a plumber or a mason or electrician, their wages at least growing higher than the inflation number? Is there some traction which is available right now?
No, there is a big traction. Firstly, we do have a dearth of skilled people, and then that's the reason why skill development is also very necessary. And with the type of activity that is going on across the country in this segment, to get good skilled labor and to see that they produce the goods the way they have to is getting increasingly difficult. Even the largest of the contractors are finding this difficult. And yes, the wages also have gone up. And I think they deserve that wage. It's because finally they are the producers. They're the ones who are, the end labor is the one who's producing what is happening on the ground. And I think if they are demanding higher wages, they deserve it. And I think they need to be paid. Yes, in the end, it just escalates your cost, but that's a small portion of what the work that you're doing. And I think that should be given without hesitation. But then the more important part is we need to bring in more and more skill development in all the trades for construction, which goes from carpentry to painting to bar bending, and so many trades are there, plumbing, electrical, all of it, because we need to develop this skills. More so now, if you look at it, a lot of labor used to go overseas for their jobs. Now, with the other Middle East and all that, the demand being softer, I believe that we have a demand here itself at home. And strangely, a lot of labor throughout India comes in from the Northeast also. It's a trend, North and Northeast, and I believe that's an opportunity for them. And ultimately, we are happy that with the activity that happens, we are providing labor, we are providing employment, and that's what matters.
Yeah, this is very important because we have seen countries like China, pulling millions of workers out of poverty because they had a huge real estate upcycle, and real estate pays much better than agriculture as such. Especially in India, where agriculture is not scalable, it's small. Yeah, so I think it's a very important aspect of the overall income growth aspect in the economy.
Most certainly. Okay, Mr. Razack, one question from mine before Vinod puts in the other question, and which is this: that if that is indeed the case, that real estate is doing its bit for the economy, the question is, I heard you say that if certain factors play out, then the cycle can be longer and bolder, if you will. Do you get a feeling that for your company as well as for the organized players at large, that the runway for growth is even better simply because almost everybody also talks about consolidation, or the fact that the dependable larger brands having a better chance at customer confidence, pre-sales, and other factors helping them? Do you see that tangible evidence, and therefore are you more bullish on yourself than what you would have been in a previous cycle wherein even the smaller competition was out there?
No, you have to be bullish. You have to be confident. Without being bullish and confident, and without believing in your activity,
Yeah.
I don't think you can succeed.
No, sir, but
that is
my point is that is the standard feature for any business. I'm just trying to understand, is this time slightly different?
No, I see. It's been the same way. I would say from the time I've been in this business, it's been the same. Now, what has changed? What has changed is the demand has changed for sure. Definitely, there was demand, and there continues to be demand as we go along. And the demand always comes to people who have consistently delivered. Of course, our company is one of them, but there are several companies in the industry that have been doing the job, and whoever has been doing the job correctly and also keeping up the commitments, they are the beneficiaries of this. Now, here the question is not whether the company is very large or small or medium, but it all depends on how somebody is doing their job, how they've been delivering to their customers, and what is the confidence the customers have in them. And finally, what is the product that you're delivering? Now, if you've got this entire combination right, your location, your pricing, your delivery background, what you've done in the past, and your customer service, if all these things put together, see, like you take any industry, now you take cars. Now you've got so many brands of cars out there on the streets, catering to every pocket of consumers. You've got from the absolutely top of the line luxury market to the common man. Where, so there's a certain product available for everyone. And every company is doing what they are doing. And I believe there is somebody who's working on volumes, somebody who's working just on the niche market. But if you're able to do the same thing in real estate, especially homes, and if you're able to deliver that product comfortably, properly, confidently to your customer, this business will go on and it becomes part of one more industry. So that is how we as developers should think, not get too excited or not get too overwhelmed with the situation now and then suddenly attitudes change. That there has to be consistency in the attitude, consistency and the approach for the business. There's no short term. It's an absolute long-term game. It's an absolute painful way of doing things. And you do it right, do it the long way. And without shortcuts, I think there's no reason why you need not be confident, and there's no reason why you should fail. But yes, there's only difference in our businesses. Some problem or the other hits you from nowhere, which you never anticipated. It could be some legal thing on some title or some regulatory thing comes in from somewhere, some new legislation, which upsets the whole rhythm that you're going through. That if that variable is sort of taken care of. Now, there is something called title insurance in the other parts of the world. We don't have that in India. If title insurance comes in, if regulatory stuff, when you've got approvals and you're developing and some new legislation or some new court order that comes in because of some public interest litigation. So these are the variables that we face. And if these variables can get controlled, I believe it will be a smooth sailing. And ultimately, what's the end result is we need to deliver. Now, I have to make sure that I do this tightrope walk and get to the end, get to the other side. And once we get to the other side, everybody benefits, including the economy and the country and the consumer.
Okay. So, well, viewers, Prestige Estate is confident about multiple things. Both our guests believe that there's an upcycle underway and they should benefit from it. Vinod, we have time for one more question. You want to take that with Mr. Razack?
Yeah, actually, two questions wrapped into one, basically. So, Razack, what we have been observing is that anecdotally, we don't have facts, but it seems that the end users are this time more active currently in terms of the absorption. So, typically the end users look at ready to move in kind of apartments, lock and key apartments. So when we talk about inventory, I always get confused. This inventory is also includes properties which will be delivered 3, 4, 5 years down the line. But what's the situation on the inventory in terms of ready to move in, where most of the interest lies in terms of end users?
No, absolutely. See, when analysts do this analysis on how much inventory, they always take the projects launched, and then that needs to get delivered, like you rightly said, over a cycle of 3 to 5 years or even 6 years. Now, if you really look at the ready inventory, now if you take, I mean, I don't have statistics for other companies, but as our company today, our ready inventory is near zero. Whatever we've built and what we have to sell as a ready product, the good news is there's no overhang in terms of ready inventory at all. And that's, I believe, and that is the situation as of today, which is quite astonishing and good. And because we also believe that once a product is ready, there's always a buyer, there's always a taker. And this time we've been able to clean up that inventory very fast. And today, what we do have in terms of inventory is projects launched in the last quarter, the previous 2-3 quarters, and that has to be delivered over the span of 3 to 5 years. That's the inventory that we always talk about and analysts talk about, and that is, and they always talk about so many months of inventory, so many months of sales. But yes, rentals have gone up, housing rentals have gone up. So people, if they buy a ready house, either they are buying it for their own occupation or they're buying it and renting it out and get a return on their investment, because people always are looking at safe methods of investing their money. Various things are there, is either the equity market or just keeping the money in a fixed deposit or securities, or alternatively real estate, because you do get growth on your capital, unlike keeping money as money, which can depreciate over a period of time. So that's why the flavor of real estate is been there. And I think in the Indian context, there always has been long-term growth on your investment.
So the related question would be that if ready inventory is almost close to zero, then in the system, obviously overall, then that means that the prices will be bid up, because whatever little inventory is there, the end user who is desperate to get a property will start bidding it up. So eventually the second order effect will be that speculators would start getting into this activity for the houses which will come in maybe a year down the line. And so what you really mentioned at the start of the conversation, that prices should remain stable, that can be at risk in this kind of a situation. Do you think that could be the case?
It always happens. When I start launching a project and at a particular price, when the product gets ready, the price is always much higher. So there's always a taker for that price, because you see, it's a cycle of 3 to 5 years. And in that 3 to 5 years, there is inflation, their earnings have gone up. So the affordability goes up. So at every point of 5 years at least, there's a different pricing. So if I've launched something at X today, it'll always be X into 1.5 or X into 1.75. Now, X can't remain at X, or there's no, I have not seen in India that X becomes X minus Y unless there's some litigated development or some unsaleable product that is there. It always goes up.
Right.
And as long as it doesn't spiral too high, as long as we see, there are two types of markets. One is the primary market, which we as developers are developing and selling. And the next one is the secondary market. Now, we have no control on the secondary market. Now, the secondary market is all about demand and supply. And if the demand is much more than the supply, so be it. I mean, that is something which is uncontrollable. Yeah. But nature has its way of equalizing things. And if the demand suddenly slows down, then the secondary market sales will definitely drop, and then there will be a period of stagnation. And that's where the period of stress comes in. The second thing that we definitely need to watch is, while we are doing what we are doing, don't stretch yourself, whether it's a home buyer individually or a speculator or an investor or a developer themselves. Don't stretch yourselves in terms of getting your balance sheet wrecked up by taking too many loans. But that's where the stress comes in. That's where the default comes in. Though I must say that no bank has lost money till date, that I can say it very confidently, and I've talked to many bankers. They've not lost money lending to real estate developers. They've gone through stress, but they've not lost money.
Yeah. Mr. Razack, sorry, just one quick follow-up to Vinod's question. So in normal parlance, in 5 years, the prices would rise, even though one can argue that the last 8-9 years, maybe the prices were kind of consolidating. But the point that you mentioned, which Vinod was probably trying to ask, Vinod, allow me that liberty, is that if the inventory is low, then could it result in slightly heightened speculative activity because people will realize that, and therefore an unnatural price rise, not just the inflation led, but a secondary factor also contributing that price rise, and therefore would prices move up higher and quicker?
That's a possibility. It's all about pure economics, demand versus supply.
Right.
Supply is less and the demand goes up, and that always leads to that unnatural price rise. And I personally believe it should not happen.
But could happen this time around?
It could happen, may happen. But the thing is, it should not happen. That's my utopian way of thinking.
Well, if only, Mr. Razack. But yeah, one certainly hopes that stays that way. But thank you. These were lovely insights, Mr. Razack. Lovely having you. Thank you for taking the time out today and being with us on Insight.
Thank you. Thank you so much.
Thank you, sir. Thank you.
Vinod, one final question to you, and maybe two questions rolled into one. I'm trying to make this from an equity watcher's perspective. The changes in the way reportage is done of revenues, pre-sales, etc., would now mean that it is only done when the project is completed. Now I hear companies and smaller size companies come and talk about how they can't give me a number about what they will do in 3-4 years time, but they believe that they'll grow at 25 years because they don't have certainty about when they'll be able to recognize the revenue. So therefore my question to you is, when you are trying to select a company, when you can't possibly predict with accuracy what the numbers could look like in 3 years time, because what you're projecting in 3 could well happen in 4 and could well happen in 2, depending on when the project gets completed. How is it that you are choosing the companies that you're choosing for investing?
So I'll go with the old wisdom that I rather be vaguely right than precisely wrong. So I have to get the cycle right, because if I don't get the cycle right, and if the cycle is not on my side, no matter how precisely whatever I do, it will not work. I mean, we have seen in the previous cycle, the best of the companies faltered. The best of the balance sheet, the largest, because cycle went against them. They couldn't do anything this year. So the biggest insurance this time around for investors is that we are at the early stage of this cycle. I don't know whether it will be the last 2-3 years, 5 years, maybe 10 years. Because China, because see, earlier, I may add one line that this is probably the most transparent real estate cycle in our history, India's history, because of GST, RERA, and other things. Earlier, you remember, real estate used to be always,
a black box
associated with black money and those kind of things. Yeah. So now things are more transparent, and the way the whole digitalization, everything is happening. This will really result in a lot of revenue for the government also, and less of fraud and other things. So I think the cycle is on your side.
Yeah, Vinod, sorry, paucity of time. So I agree, cycle is on your side. My question is, so with that assumption, how do you choose within? So there are, let's say 8 very high quality companies, 8 mid-sized companies which won't be high quality but still to prove and all of that. How are you choosing between these players? Is my question.
Yes,
because you can't predict with certainty.
As Mr. Razack said, actually, he has said it actually. The companies which are not over leveraging, not over trading this, they're not getting too excited about this. Because last time the companies which got into trouble was who went on a land buying spree. Actually. They thought it was an endless real estate cycle, leveraged too much. And over the last 10 years, they've only been trying to deleverage. That's the only activity they have been doing for the last 10 years. So if you go on a sustained way, don't over leverage, don't over trade, and you have a sustainable business model, good brand, I think they'll do well in the cycle.
Got it. Okay. That was a key line. And I'm guessing that you've chosen your companies based on that. My last question before we wrap up the show, does your portfolio of companies have large companies alone, or is it a mix of large and mid-sized companies within the real estate pack?
Yeah, it's a mix of companies, and it's a function of, so our real estate analysts keeps changing the names based on, because suddenly you have a run up. When we last took out our report, there was a run up in some of these companies. So a lot of these ratings went from buy to add and hold and things like that. But it's across the board, be it a DLF or a Brigade or, Prestige. A lot of companies for it.
Got
it. Strong.
Got it. Lovely insights. Thank you for this whole gross fixed capital formation argument around what happened in the previous cycle and the current cycle. And thank you for being my co-anchor on what was a very interesting episode of Insight.
It was a pleasure. Niraj. Thank
Much
you so much.
appreciate. And viewers, thanks for tuning in to this last episode of Insight. We'll be back after a small hiatus with yet another promising set of conversations with investment experts as well as sector experts.